Welcome back to Media Week. Let's get a check on the media sector's performance now on the share market this week. We're joined by Evan Lucas from IG. Evan, great to have your company on the show. Let's start with REA Group because it bought a stake this week in iProperty Group. How significant is this for the company going forward?
Yeah, interesting one here, Ingrid, and the reason for it is that they've obviously acquired it off a French company called iLogan. It's about 17.22% stake they're going to take. But the reason for it and the why it's interesting is that, again, it's the Asian flavour behind it. iProperty is mainly focused on developments throughout Southeast Asia, particularly Malaysia, Singapore, also over in Hong Kong is where they get most of their earnings. Interesting, they haven't gone harder. They do want a board stake, but it certainly shows that REA is certainly wanting to expand in that Asian area, but doesn't want to completely put direct money in there just yet. So I think it's a good opportunity. I just think it needs to be integrated into their company to actually see how that will actually materialise into some extra growth.
All right, Evan, we've obviously been seeing reporting season in the US, Twitter becoming the hottest stock on Wall Street yet again.
Yeah, it's an interesting one. Obviously, we saw a 30% move on the off-market, 20% in the actual market. That's normally reserved for small-cap stocks, not a mega-cap stock, which is what Twitter is. So it just shows how volatile it is. It was a lot of short covering, but interesting numbers were the fact that their mobile advertising saw a 186% increase over the year. They also saw the average monthly users up quite substantially, and they're more and more emphasising the fact that they are now monetising their business. Revenue up 11%. They saw earnings up 24%, and FY15 guidance has also been moved. So a lot of shorting in this stock, and that's why I think you saw such a volatile move to the upside, because a lot of people still don't know how Twitter will monetize the business. But maybe this quarterly result is a final sign that they are actually moving in the right direction, and that's certainly what the market reacted to.
Do you think it can continue seeing growth in advertising and subscribers, Evan?
Yeah, that's the interesting question, and the one thing that came out of it that I saw is that monthly average users, although they were up, they were not as good as the monthly average increase they saw in the first quarter, and it was savaged on that number in the fact that they couldn't sustain growth. So that's the interesting dilemma, and now with the results we saw yesterday, on a forward basis, it's trading on a PE of just shy of 1,000 times. So no matter what way you look at it, it's still very expensive. So that's the other thing, it has to keep growing to justify the kind of levels it has. So interesting will be to see how that happens and whether or not they continue to see the kind of revenue they're projecting actually coming into the books.
Twitter and those sort of stocks have been out of favour on Wall Street for a while. Do you expect to see this sort of momentum tech media trade back?
Yeah, maybe. I mean, again, it also depends on what you look at. I mean, Facebook had this sort of similar thing when they first started. They, got really quite high up there and are coming back in on a multiple basis and are now getting supported quite nicely. 60% comes from the mobile assets as well. Again, all of that tech space, however, is very, very expensive. If you look at your Amazons, if you also look at something like a LinkedIn, which is probably the most stable out of all of them because they've had a model from day dot that actually has a subscriber income as well. So they're all very expensive. They all trade at 50 times earnings or more, and something like Amazon trades on over 1,000. So it's all very hard to say whether or not you will certainly get the momentum back. People want exposure to it, but it's a question of whether or not the earnings actually can end up justifying these absolute astronomical sort of prices you currently see. All
right, Evan Lucas, great to get your analysis.
Thanks, Ingrid.
Let's go back to James Manning now, our guest host and editor and publisher of Media Week. James, I want to chat a bit about the consumer survey, the Australian media consumer survey done by Deloitte. What were sort of the key takeouts for you out of that this month?
Yeah, it was interesting. It's good to get this stuff regularly, and there's a few of them now that seem to come out annually. Some come out quarterly, but they're all trending in the same direction. It was good to get updates on tablets and smartphone usage. Deloitte's had tablet ownership at about 63%. Smartphones is just above 80% now. And multitasking, 79% of us are multitasking now when we're with connected devices. Social media usage has really surged up 170%. What do you think about that, Ingrid? Is that right?
That sounds about right, and I'm definitely on with the multitasking on my phone, watching television and on the computer all at once. But I want to also say print television still having more influence than online. Is that what?
Yeah, look, people pay more attention to print ads, right, which is sort of interesting, and what the publishers have been telling advertisers for quite a while, not with as much success as they'd like, and TV still certainly the most influential when it comes to the buying decisions of people. And
binge viewing. This is something I do a lot of.
Yeah, I was a bit surprised. Very high numbers of people who watch binge viewing, so 3-4 episodes back to back of their TV shows. The statistics in the OzTam data show growing, that's a growing importance, but still a lot of people are watching live TV. It's still the far biggest audiences. So maybe a lot of people may be downloading content, binge viewing, they're perhaps hiring series on DVD, perhaps.
Catching up.
Yeah.
I want to talk a bit about magazines as well. Bauer Media coming out and pretty much coming close to axing Shop Till You Drop from what it looks like. What did you make of that decision?
Yeah, look, it was, they took the magazine, look, it was launched, it hasn't been around that long. Gee, I don't know, it's 5, 6 years maybe, some of the Shop Till You Drop, monthly, very successful as a buying guide. It was really a catalogue for women. They loved it, you know, every month seeing what was out there and they could use it to take it into shops or something and, yep, I'll have one of them. Online's changed all that a little bit. They were late to the party there. They started up their own online shop, but they took the magazine fortnightly last year. Now, the people were still buying it, but the advertising support started to drop away. So they've been doing some double issues, they call them, this year, where it was monthly again, and they were apparently getting reasonably good cover sales, but the advertising support didn't come back. So what they've done is take it quarterly. Instead of axing it completely, they think there's still quite a bit of value in the brand, so it'll become a quarterly magazine. They'll expand what they're doing online. And there could be even a Shop Till You Drop presence in other magazines.
Yeah.
For example, you know, in Clio or Cosmo, there might be a couple of pages, Shop Till You Drop merchandise.
Yeah, to get you through the month by month.
Yeah.
Also, I want to talk a bit about Netflix. This is interesting given the survey we were just talking about. An executive from Netflix was speaking in Sydney this week. What's an update from them?
They didn't really. It was their Consumer Insights guy come out from the US to a marketing conference, and he had some interesting stuff to say to marketers about, you know, his experience in the business. But when it came to Netflix's intentions, Netflix's audience, he was stum, nothing to stay. So, you know, he had no update about what they might be doing in the Australian market. Sorry, can't help you. I'm not sure he would. He probably knew anyway. The profiles of your audience, sorry, we don't release any data about our audience. So, you know.
So not much to say at all.
No, he wasn't really that helpful wanting to have. I mean, the market's certainly spooked by Netflix. There's a Netflix story every couple of days, you know, but they still.
Well, wasn't that Orange is the New Black? There's like a couple of shows in the US that are doing really well, winning Emmys, and they're on Netflix.
Yeah, look, they've really cut through, and the big change came when they started commissioning their own content, which was very successul. And they did that after analysing their audience. But he stopped short. Somebody asked him a question about, you know, is it all data-driven? Do you just, you know, is your programming? Because if you're a Netflix customer, they look at your viewing habit, then they recommend shows. And they're very good at that. You know, a bit like Amazon. You shop at Amazon, and all of a sudden they're going to sort of recommend what you want to buy. Netflix is the same.
Yeah, OK. And just quickly, AAP as well, investing in Crown content. What have they bought there?
Yeah, look, they bought something called the Margaret G Media Guide, which has been a staple for the sector for a lot of PR people, and that use it as a bit of their Bible. So,
get a lot more clients from that.
Yeah, and when just who they want to market their press releases and that too. A couple of books, Who's Who in Australian business, Who's Who in Australia, just stuff like that. Get guides to government.
All right, well, we've got to take a quick break here on Media Week, but when we come back, we'll bring you details on 10's best ratings in years. What's behind it? We'll tell you next.